Good day, guys, and welcome to the fifth episode of our Forex class series. And in today's class, we're going to be talking about understanding Forex terminologies. Okay, so we all know what Forex means. Now, what is the meaning of terminology? All right, but before we start, I quickly want to get my list close by. As you all know, I love to check them so I know exactly what I want to talk about, and in stuff like this we don't speak out of line. Okay, so the first is, what is terminology? All right, so terminology is a group of specialized words that has their own respective meaning. You understand? So like in military terms, we have this encode word that they have this encode word they use. You understand? Now let's take for instance, this is the time. Let's do it like a plus sign. So this upper part is 12 o'clock. Here to the right is 3 o'clock. To the left is 6 o'clock, and so the left, I mean down is 6 o'clock. Then to the left is 9 o'clock. Okay, something like this. Then you know, just imagine your time already. So the military, in the military, they always used to say something like, "Look at the 6 o'clock." You know what 6 o'clock means? Meaning they tell you, "Look at your back." So that is encoded. When they say you're 3 o'clock, you understand? They are trying to encode whatever they are communicating with themselves, so that a third party or civilian won't understand what they are saying. You understand? Yeah. So that is the meaning of terminology. It's like a group of specialized words that have their own respective meaning. All right. So, with that being said, let's go over to the next one. Now, examples of this terminology, of Forex terminology. Examples. Number one, bid price. Bid price is also known as the buy price. So, when a trader or you are in a settings and group of traders are discussing and they said, "Oh, what's the bid price?" So you don't get confused. Bid price is the buying price. Then next on our list is ask price. Ask price is the selling price. Okay, you're in the settings, the trader setting, and they are discussing and they say, "Oh, please, what's the ask price again?" The ask price is the selling price. All right, so let's move on to the next one. Spread. I think I explained this in one of our previous classes. Spread is the difference between the buy and the ask price. You understand? The bid and the ask price, right? Or the buy and the selling price. Okay, so in other words, remember, spread is the fees attached to this bid or ask price. So let me say, in the platform you want to buy or you want to sell, spread is the charges attached to them. Okay, so spread is the difference between bid and ask price. Simple. Now, what to the next one? Lot size. All right, lot size. So what is lot size? Lot size is the amount in which we enter into the market. You understand? You want to trade a particular pair. Now you have let me say you have $1,000 in your account. Okay, and you want to enter into a particular trade. So lot size is what you are going to determine the amount you want to use to enter that trade. Understand? So if you want to enter with $10, you want to enter with $20, you want to enter with $1, whatever amount, so that is lot size. So if you use $1 to enter, that $1 is your lot size. So the different type of lot size we have are standard lot size, then we have mini lot size, and we have macro lot size. Okay, standard, mini, and macro. So the standard lot size is 1.0. Then the mini lot size is 0.1. Then the macro lot size is 0.01. All right, so we move over to margin and free margin. Okay, so why I made mention of free margin is because we can't talk about margin and not talk about free margin. Okay, because whenever you open your MetaTrader 5, you are going to see that's whenever when you go to your balance section, you see your balance, equity, and free margin. Yeah, but whenever you have an active trade running, you see balance, equity, margin, free margin, and margin level. So now let's look at margin and free margin. Okay, so the best way to explain margin and free margin is this. Some of us, our phones, we have 258 gig. Then others are higher, others are lower, but let's stick with that number, 258 gig. So whenever you go to your phone manager, you see free space and used space. So free space means you can, download more games, apps, movies, whatever on the free space. But the used space is letting you know this is what you've used up. Okay. Now let's take exact that's exact example. Let's take it to the Forex term. So margin is like your purchasing power that you've used up on your balance. You understand? Then free margin is what you have left, the purchasing power you have left to open more position and maintain those positions. If you see this screenshot here, you'll see that I open about 4 positions here. You understand? Why are these positions being maintained without my broker telling me I can't open more position? It's because I still have margins free. You understand? Look at the margin, about 9,000 something. I can open another 80 lot size, or I can open another 50 or 1 lot size. You understand? But when that free margin is really low, like it's going down to like $500, I'm not sure I can even open any other position again. You understand? So free margin, free purchasing power to open more position and maintain those position. Margin used up purchasing power. So I hope I did justice to that. Now we move on to the next one, which is pips. So now we're going to look at um, what pips stands for and the use case. Okay. Now pips, PIPS, stands for percentage in points, and its use case is that we use it for measuring the amount we make from the market. Yeah, that's it. Like for instance, someone tell you, "Oh, I made $20 from the market." So how to calculate the $20 is by using pips. You see the price when you open your chart. Yep, on the that should be the right hand side. Yeah, the right hand side you see those prices moving. So as they move up or down, so they are called prices and they can also be called pips. You understand? So those pips are what we use to measure the amount we make or the amount we lose from the market. Okay, now we move over to the next one, which is equity. All right, so I'm going to put a picture right here, a screenshot. Then you see on the screenshot, you see balance, you see equity, then I guess free margin. Yep, you see free margin. So whenever you open your Meta 5, you log into your account, you are going to see stuff like this: balance, equity, and free margin. Now, what is equity? Uh Best explanation I can give to the best of my knowledge, equity is the fluctuation of what your balance will be after an active trade is closed. Equity is the fluctuation of what your balance will be after you close your running trade or your active trade. So let me give you